Ever wondered how JEPI compares to SVOL, or how they both fare against the JPMorgan Nasdaq Equity Premium Inc. ETF? Well, today, we're diving into the data to find out. In the competitive world of investing, it's crucial to understand the performance of different investment options. Today, we're putting three contenders under the microscope: JEPI, SVOL, and the JPMorgan Nasdaq Equity Premium Inc. ETF. We'll be looking at their start and end balances, annualized returns, standard deviations, best and worst years, maximum drawdowns, Sharpe and Sortino ratios, benchmark correlations, dividend yields, and expense ratios. These factors will help us paint a clearer picture of their performance and potential for return. So, buckle up as we delve into the numbers and see how these investments stack up against each other. Let's kick things off with JEPI. The JPMorgan Equity Premium Income ETF, or JEPI, has shown some solid performance. Starting with a balance of $10,000, it achieved an end balance of $11,652. That's a compound annual growth rate, or CAGR, of 10.73%. When it comes to volatility, JEPI's standard deviation is 7.64%, with the best year seeing returns of 9.81% and the worst year at 6.11%. Remember to subscribe and comment on what funds you would like me to review next. An important measure to consider is the maximum drawdown, which for JEPI was negative 4.11%. In terms of risk-adjusted performance, the Sharpe Ratio was 0.71, while the Sortino Ratio was 1.09. Benchmark correlation, which measures how closely JEPI's performance aligns with the market, was 0.81. Let's not forget about dividends. JEPI had a dividend yield of 7.32%. As for the expense ratio, it's at a reasonable 0.35%. All these figures give you a comprehensive view of JEPI's performance. It's a mix of steady returns, reasonable volatility, and an attractive dividend yield. That gives you a snapshot of what investing in JEPI could yield. But how does it compare to SVOL? Now let's turn our attention to SVOL. SVOL started with a balance of $10,000, much like JEPI. However, it finished with a more robust end balance of $13,111. This represents an annualized return, or CAGR, of 19.79%, almost doubling that of JEPI. The standard deviation, which measures the volatility or risk, was slightly lower than JEPI at 7.06%, suggesting a slightly more stable performance. Its best year saw a whopping 22.84% return, while its worst year was not far off JEPI's at 6.74%. Now, what sets SVOL apart is its maximum drawdown, which is a mere 1.47%. This is significantly lower than JEPI's 4.11%, indicating less severe losses. In terms of risk-adjusted performance, SVOL outperformed JEPI with a Sharpe ratio of 1.88 and a Sortino ratio of 5.99. This shows that SVOL was able to provide higher returns for the same level of risk. SVOL also had a lower benchmark correlation at 0.67, indicating a slightly more independent performance than JEPI. Last but not least, SVOL offered a substantial dividend yield of 15.82%, but it comes with a higher expense ratio of 1.16%. So that's SVOL, but how does it stand against the JPMorgan Nasdaq Equity Premium Inc. ETF? Finally, we turn to the JPMorgan Nasdaq Equity Premium Inc. ETF. This fund has shown an impressive performance, starting with an initial balance of $10,000 and ending with a whopping $15,735. It boasts an annualized return, or CAGR, of 35.28%. The standard deviation is 11%, indicating a higher volatility compared to JEPI and SVOL. The best year for this ETF saw a return of 36.23%, while the worst year still had a commendable 15.5% return. The maximum drawdown was a mere minus 4.2%. The Sharpe Ratio and Sortino Ratio stand at 2.36 and 5.7 respectively, reflecting a good risk-adjusted return. The fund is perfectly correlated with the benchmark and offers a dividend yield of 8.81%, with a low expense ratio of just 0.35%. That's the roundup of the JPMorgan Nasdaq Equity Premium Inc. ETF. Now let's put it all together. So, how do these three compare? Let's break it down. JP has shown consistent performance with an annualized return of 10.73% and a relatively low standard deviation. However, its maximum drawdown and Sharpe Ratio suggest a less than optimal risk-reward balance. On the other hand, SVOL has outperformed JEPI with an annualized return of 19.79% and a higher Sharpe Ratio indicating a better risk-reward scenario. Its expense ratio is higher, but this is balanced by a substantial dividend yield of 15.82%. Lastly, the JPMorgan Nasdaq Equity Premium Inc. ETF stands out with an impressive annualized return of 35.28%. This high return coupled with a strong Sharpe Ratio makes it a compelling option, although it does come with a higher standard deviation, indicating greater volatility. And there you have it, a comprehensive comparison of JEPI, SVOL, and the JPMorgan Nasdaq Equity Premium Inc. ETF. Remember to subscribe and comment on what fund you would like me to review next. As always, it's crucial to understand your investment options before making a decision. Happy investing.